What up, folks? Welcome back to the Gauntlet. Be trying to get this stuff done in 10 minutes. Attention span, right? Want to keep it as saucy as possible and promote as much of the truth as possible, right? The dollar, the 10-year yield for the US dollar and the 10-year yield for the Japanese yen, the volatility index for the stock market, the volatility index for gold, and then the fear and greed index for the stock market and the fear and greed index for the crypto market. The whole shebang. No one else on YouTube or no one else on social media is saying what I'm saying. They can get close, right? I can't really do what they do, and they sure in the hell can't do what I do. But if you put it together, you get the sauce, right? So shout out to the Gareth Soloways of the world and Camel Finances of the world and Clear Value Taxes of the world. And there's many more, right? They do very well at what they actually do, right? Putting out daily videos and keeping you abreast of what's going on in the world of trading and investing. Well, if you're involved in trading and investing, then it must pertain to you, right? You're either a slave that's being traded, or you can be a slave that's actually doing some trading. So it involves you, right? Which means you probably should listen to a daily video that pertains to trading and investing. I got all the answers, folks. So it makes me feel good to know that I'm able to pass forward the truth and put myself under the umbrella of what these other analysts are doing that are like viral. They have a lot of followers. And like I said, I don't really need followers. I prefer to have team members. People who are able to get to the business and promote it, the truth. So we'll get to the dollar. I mean, we already know Kamini has been taken off the face of the earth, and all those wives, he's probably hanging out with them right now. And we saw gold spike. Pax Gold, digital gold, which is running 24/7. We got to see that, right? When the dollar drops, gold elevates. When war happens, then gold elevates. The stock market will see fear because of the uncertainty of what's happening in that war, and then gold will elevate. But it happened while the market was closed, supposedly, right? We already know within our community that whenever something happens with Iran, it usually happens over the weekend. Why? Because it'll give everyone else in the market a heads up to sell the stock market and to buy gold. They will do it over the weekend, so no one can do anything. The problem is you can buy Pax Gold because it's digital gold. Now we have another check mark in the box of the people, because you have the banks and then you have the people, right? The banks don't want the people to have anything. They can't have yield from crypto. We're not going to sign we're not going to sign the Clarity Act because we don't want the people to get their own yield. We don't want the people to take their money out of the banks and go straight to crypto and take all the deposits and go over to crypto because they can get their own yields, right? I'm supposed to get this done in 10 minutes. So the deal will be, okay, we'll sign the Clarity Act, but as long as the people can't go get their own yields, because if they can get their own yields, they're going to take all their money out of our banks, not the people's banks, the banks. Let's get back to the dollar. So we see, right? The basic scale of 100. Again, that's really all we need to do. I add more information to it, but all you need to understand is how the scale looks. You have to know your asset or whatever you're looking at, know the price of it, and then apply the scale and find your position within the scale. Are you up towards the top? Are you in the middle? Or are you at the bottom? We buy low at a discount, we sell high at a premium, and we stay out of the middle. We see that the dollar's hovering between 97 cents and a dollar, or 97 and 100, right? We don't know if it's cents, we don't know if it's dollars, we don't know, but the numbers are fractals, so you can use them however you want to use them. You can say it's 100, you can say it's 100 cents, you can say it's $100, it doesn't matter. It's 100 is 100. When you cut 100 in half, you get 50. You have 75, 50, 25, and then 0, because it's going down there. So we're going to get a taste of all of that because we're going to be printing tens of trillions of dollars, right? Which is going to cause the value of the dollar to drop. Okay, well, it did drop. Why is it elevating? Because the drop means we printed money, and the elevation means we're spending money, and it zigzags. We're going to print the money. Why do we print the money? We don't print the money just to sit on it. We print it so that it can be spent. Oh, yeah. So 100. It's great to utilize this concept with the dollar because it's hovering at 100. So that's perfect. It's great for teaching, right? The more you teach it, the more you enhance what you already know, the basic scale of 100. That's the value. Okay, what about the cost to borrow the dollar? See, it's dropping. We cut interest rates 2 years ago by 1.75 basis points. And now it's finally dropping a year later. I thought it would drop. If they say they cut, why isn't it not dropping? It takes a year, I guess. So now we're under the 4. 654. We talked about this with gold. It could be $6, $5, $4. It could be 60 cents, 50 cents, 40 cents. It could be $600, $500, $400. It don't matter. It's fractalization. That's the mentality. I wasn't taught fractalization when I first started trading. So here, once again, I'm giving people information that I wasn't even given. I'm doing what I would want someone to do for me. That's what I do. I give people the truth for free. I don't charge $10,000. 654. 4 is the discount. Okay, we're at 3.9. Right. We should be at 3.5 because the federal funds rate is at 3.5. And you see the 10-year yield is following the federal funds rate. Their goal is to get down to 2%, right? And that's where we're heading. Supposedly, that's where we're heading. Sometimes it's adding up and sometimes it's doing the direct opposite, right? But all I know is that the little people, the last finish first, right? There you go. Poor people, people who don't have money to spend, they have they're penny pinching. They need the 10-year yield to drop to 2%. We need the housing percentage to come down. We need the car percentages to come down. All of that is tied into all these percentages. So in this case, we're talking 6%, 5%, 4%, right? We're trying to get down to 2%. And it's the Federal Reserve that does that. So when are they going to cut the rates again? Well, I'm seeing that they cut the rates in September. That's when they start cutting rates. I didn't know that. I'm thinking, oh, they keep saying, oh, every meeting, there's a possibility that they'll cut the rates. No, they don't cut the rates till September. They did it last year and they did it the year of the election. It started in September. Now I'm not waiting for them to cut rates. I'm waiting for September because that's the end of the fiscal year and the beginning of the new fiscal year. That has to do with the money, fiscal. The percentage of the cost to borrow money is dropping, right? That's what we want. So we're already at 10 minutes. So Let's go to the Japanese 10-year, the cost to borrow the Japanese yen. It spiked all the way up to 2.5, right? 3.5, 2.5, 1.5. It didn't quite get to 2.5, but we understand where we're at in the scale. Okay, we went up towards 2.5. Maybe we're pulling back down to 1.5 and then bounce at 1.5 and go to 3.5, because that's how price works. It doesn't matter if it's a percentage. It doesn't matter if it's gold. It doesn't matter if it's oil, natural gas. It doesn't matter if it's crypto. The scale, if it has a price, if it has a value, it respects the scale of 100. So I'm going to wind this down. And the reason I caught the buy on the Japanese yen. So it's great that I can apply what I'm seeing on my gauntlet and applying what I'm doing, like all this effort that I put in to pay it forward and show people what the hell's going on. I'm taking advantage of it right in front of you, giving you in your face live examples of how to utilize these techniques. Being true to myself, being true to the people around me, and that's how you do it, right? So I don't want to make this too much longer, right? That's the Japanese yen, the 10-year yield, the cost to borrow the yen. Then we'll go to the volatility index for the stock market. We see that it's elevating. We're talking 35, 25, 15. 15 being the discount. Why is it elevating? Because there's fear coming towards the market. If this thing gets up to 60, 50, 40, right? 35, 25, 15, then 60, 50, 40, and 85, 75, 65. You'll see the reoccurring theme of me explaining this gauntlet, and then you'll be like able to say what I'm going to say before I say it. If you follow these things, get yourself a chart, get yourself some alerts, and put the alerts on it. You can get an alert for the VIX and WEBULL, right? Which is awesome. But we're still hovering at the bottom on the VIX. If this gets up towards 35 and starts passing 35, you're going to see the market start to crash. And that's what, that's the VIX will tell you. And once it gets up to 65, 75, 85, it's going to go up there and come right back down. It never stays up there. It just tells you the max volatility. So because we want to buy low, that means the VIX has to go up to 85, 65, 75, 85, while the market dips down towards its discounted rate and allow you to get yourself into the market, because that VIX ain't going to stay up there. You see the chart. The spikes that go up towards 60, they go in and out, K pattern. And then it just drops. And then you get your buy positions, and then your buy positions will start going to the upside while the VIX drops back down to 15. All right. The gold volatility index is fairly new to this system that I implemented. I don't really know how it works that well. It spiked up to 40, so basically 35, 40-ish. I don't have a real solid bead on this yet. I don't know how it works because gold is going crazy to the upside. You would think that if this is going higher, then gold would go lower. I don't know. I'm going to continue to follow this to see if I can get a bead on what this actually says. So we'll skip that for now. The fear and greed index for the stock market is heading into fear. The crypto fear market is already been extreme, right? And cryptos have bottomed out. So there's a chance that they're going to spike. But they don't have to. But we'll be able to read this and dollar cost average accordingly. This is not rocket science. The gauntlet is excellent. I believe that it should go viral because this is the type of information you should be following if you're getting involved in trading and investing. And you should get involved because you're being traded and invested. So the banks love you, right? They love you so much that they only want to give you 2% on your money, right? And give you 2% back every year. It's such a little amount that nobody even cares about 2% back in their bank account. You can't even see it. You can't feel it. And shout out to crypto because it's given us a way to go earn our own yields, right? So shout out to the people. That's who we do it for, not the profits. We want to be consistent and persistent. because that's what wins in the market. And to beat the market, you must become the market. The market moves with integrity through the price, through the basic scale of 100. You must have integrity. If you lack integrity of the price, it's there. It's the truth. It's no debate. It's no opinion. These are the facts, right? Utilize it. Build your integrity, right? Because if you don't, you're going to get wrecked, and you're going to go to loss review complaining about the psychology of trading and investing. Just like those mentors, quote unquote mentors, they're not mentors. They're predators. They're waiting for you to come to loss review because you're going to pay those monthly fees to be able to go to loss review and cry on their shoulders and all that. They're not going to let you do that for free. They need you to pay for that, right? Watch who you follow, because if you know you're following a predator, why do that? You're supporting and condoning predatory ways and actions. You shouldn't do that, all right? You should support the truth. Hey.